Krispy Kreme has been serving up more than just donuts lately. Its stock has been sizzling as mean traders pile in. Can the donut brand become the next Wall Street disruptor? More importantly, will Krispy Kreme meteoric rise tempt institutional investors to bite? Or will the sugar rush fade as quickly as it came? Now, this is the monthly chart on Krispy Kreme. And ever since price dropped below $10, it's been on a down spiral. However, the low has been put in based on this huge surge higher. And so we call this monthly buyers. We'll say at 275. And we're going to call this monthly sellers at $11.50. Let's go down to the weekly chart now. And with this surge that we've seen this past week, price took out a weekly sell level, and price has pulled back from this other weekly sell level, and then you have another one just above that. So let's analyze the price action. As the bulls pushed up price, it had to contend with sellers at about $4.30. The bulls won this battle. However, there was less bulls when price surged to this $5.50 level, meaning there became an imbalance between the sellers and the buyers. And at this level, the sellers won the battle. So let's put in, since that level held, weekly sellers at $5.50, and we're going to put in the next level at $6.30. Now, a couple things to note. You have weekly levels going against a monthly level. Typically, in this case, the monthly level wins out all the time. Again, if you scroll out to the monthly chart, you can see that prices are now selling at a discount. And so this is the level where institutional traders or mean traders or retail traders start to add to their portfolio. One thing I want to note, you had this rally based on candles in the huge volume, and so nested within this monthly buy level, you have a weekly buy level. All right, so we want to analyze this price structure on the daily chart. All right, so you have this rally in price. You have this bull flag, and then you have this pop. Now, you didn't get an opportunity. You got no notice. Price just surged, but it kind of gave you an idea, right? You hit a bottom. You tested that bottom at $2.60. You have the first surge. Price takes a breather. One could have put a buy to go long at about 340. And had you been paying attention to the levels, resistance, sell levels above, you would have took some profits, easily doubling your reward to risk ratio, depending on where you put your stop. Question is, what happens next? If you think you missed the move higher, and if you think the story is not over, well, look for price to continue to move lower, and look for your opportunity to get long near that weekly buyer's level at about $3.25. Your stop goes below at about $2.30.